we have with us Abhishek Jain from Arihant Capital Markets and Nilesh Sakhe, former member IRDIA. Abhishek and Nilesh, thank you for joining me. I'll raise the first question to both of you. With the onset of the cess on Sin goods, ITC shares fell to a 3-year low. Did the markets anticipate the scale of this, or was it a bit of a shock?
This is largely a shock for the market, largely when we see the holding which they are having right now. If you see most of the financial institution, they are holding close to 24%. The government institution, which you have highlighted, they are holding 15.87%. And no one was expecting this kind of announcement and the impact for this company. And their losses are, apart from the investment value loss, their loss is also on the dividend side also. Because ITC is one of the sharpest, highest dividend paying company among all the top 100 companies, which most of the insurance companies portfolios are there. So especially on the MNC side. So this is a notional loss. This is again a twice double whammy for most of the insurance companies, and the fail to react on and on this announcement. Also, we have seen one more impact, which I personally think the earning pressure, which is going to be there right now. So there is a something called terminal value. So this is going to impact the terminal value of the company, and the profitability is likely to remain under pressure for the ITC, at least for going forward going. And it will take 2-3 years to have an neutralization of impact going forward.
Right. And Abhishek, what does a 7 billion loss in market value tell us about investor sentiment after the new tax announcement?
So most of the investors are right now, like when I talk about the institution investor, they are in the process of exiting the stock only. And we've seen last 2 days, there's been a 15% fall is there, and this fall is not still not stopped as of now. And we have seen some of the financial institutions also, despite the market doing very well in last 2 days. So that is something which I believe when we may see certain further more selling on the stock, and this may not add in the current level only, and maybe at close to 300 or 310 level, where we see some kind of impact is the going to be some institution the investor buying will happen. But the government side, definitely there is an impact, because most of the insurance companies are largely dependent on their dividend also, which no one is talking about. But obviously there will be impact on the dividend side also. So that is something most of the
right.
I'm not.
Sorry to interrupt you, Mr. Nilesh.
Yes.
I just wanted to jump onto that. Now, insurance firms hold nearly 19% in ITC and have lost over 12,500 crore rupees in 2 days. How serious is this for their portfolios?
See, out of the total exposure of about 17 lakh crore for LIC, its exposure to ITC is about 70,000, 80,000 crore, which comes to 4% of their total equity exposure. Now, obviously, when such jerk happens, there is anxiety as to what we'll do. But LIC has in the past again entered the market with the same stock at lower price. So not afraid, because these things do happen. At the same time, you will observe that out of last data which I have, out of 25 years, the stock has yielded positive return in 19 out of 25. And some years it has given exceptionally good return of 48%, 58%, so on and so forth. So see, equity exposure all said and done, you have to take risk. And these things, these jerks do happen. And LIC must have thought of what action they should take. Either they should sell in the market and let the stock price go down further, or stabilize it by not selling it and buying it when the price almost bottoms out.
Right. So, Mr. Nilesh, can you just, what do you think that the investment strategy is going to be going forward? What are your thoughts in onset of this erosion?
No, I don't have privy to this information, but in the past, wherever market had collapsed or wherever some equity had collapsed, LIC has actually invested when the share price has bottomed out. So here also it may do so. Again, as I said, I don't have privy to the information from LIC or from insurance companies. But generally this happens because LIC's exposure in this company is more than 15%, which is not a small. If LIC decides to exit altogether, then probably market will not be able to sustain this exit. So the question is, at such situation, what such big investors should do? In my view, it should wait and watch and try to buy it at appropriate time. As it is, see, mutual funds are also holding more than 15% equity in ITC, and they have also not sold out immediately. So every institutional investor will think about it at appropriate time, whether they should sell and in what quantity, and again buy when it is quite attractive.
Thank you so much, Mr. Abhishek and Mr. Nilesh, for your insights on this discussion.